presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about taking action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials right now trading up 537. NASDAQ is up 344. S&P's up 76. Gold contract down 520, starting at $17.89 an ounce. We have silver up 22 cents, $22.50 an ounce. Light sweet crude. Where are you? Light sweet crude. Yeah, caught a bit. Up 276, trading 71.37. Notes and bonds. The 10-year note down 17 ticks, trading 130.20. The 30-year off a full point at 160.30. And King Dollar. King Dollar right now down 68 ticks, trading out at 96.483. The euro is at 112.82. The yen is at 114.09. And the British pound is at 132.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? This is going to be a nice setup, man. We had a trader's market here, folks. And so what we had out here is this. Yesterday, rejected lower price, had lighter volume as you went against the swing. Okay, so what you have here, we had the swing that's laying out here at 137 million, 132 million, and 127. So we come into that yesterday with 107, the rejected lower price. Now, what do we do today? You got a nice bounce going, okay? Look at the contraction of volume. Monster, man. You're at 49 million. So my take is that we are going to go right back topside again. You know, we'll see whether we test the lows of the highs. The SPY, I'm figuring, you know, we're dealing with about 467. Right now, you're at 462. The high is 473. I don't think we'll hit the high. Most times when this happens, folks, what you get is this. You get another acceleration up. You'll have another contraction of volume. Let's see, Tuesday, Wednesday. This is setting up really nice, man. So let's pitch after a big day like today. Okay, you can picture more than likely what will end up happening is that you might go a little sideways tomorrow. They'll jam it. So tomorrow is Wednesday. Yeah, perfect. Thursday, you jam it higher. We go away for the Christmas holiday. We come back next week. Goes sideways, tries to mess around with the top here, and then January, whatever day we come back to work, I suspect that we're going to have that had brought us, we were at the top of the range, and I suspect coming January, you're going to go right back downtown. We got to take a look at the NDX 100. What do we have with the NDX 100? You have the exact same setup inside the NDX. The NDX right now, we're at 388. Bottom line is that this can get up to 400. That's how this is shaking out. Thursday is a full day. Because the markets are closed Friday. This week, next week, we don't get anything. Gold contract out here. We take a look at the gold contract. Gold contract traded down to 1785. You're at 1789 right now. Bottom line, we'll see how this baby shakes out. You know, my take is we're going a lot higher, but it's a struggle. There's no two ways about it, man. This thing's just been messing around, and this has no doubt to the U.S. dollar, because the dollar, folks, is hanging at highs and looks that, this high can be basically blown away. Right now you're at 96,478, and we've been up here for 3 weeks thus far, 3 trading weeks. So it's pretty wild, man. And we'll see if, in fact, it wants to break out or break down. Let's go take a look at some of the higher volume equities out here. Okay, so you got Apple up 290, Carnival's up 169, Micron, big number, up that would come up with numbers. They're up 812. You have Nvidia up $12. Uber Technologies up 2, Tesla's up 34, Microsoft's up 7. Well, what's intriguing is that here, watch this, AARK. I had asked Dave Mazda about this yesterday, and he didn't answer the question because it's a competitor, I guess. Anyway, Kathy Wood, bottom line, they just came out with a new statement. I'm sure that her compliance department said, "Hey, man, you can't tell people that you're going to compound 40% a year to try to collect money." So the bottom line is that, let's see. Oh, that's the one in deep value. Let's see. No, this is the one from yesterday. Right before I get on the air, I got to find this. Oh, here it is. Yeah, she just came out with actually 11:30 this morning. She came out with a new statement, and the new statement is revising the statement that she thinks that ARK was going to go up 40% compounded per year for 5 years. So let's see. Please note that ARK revised this statement from its original version to clarify any misconception in the marketplace. The footnote says, adding that the statement is based on ARK's research, current views, assumptions, and is not a guarantee of future results. Forecasts are inherently limited and cannot be relied upon. And even after the clarification, Wood still predicts 30 to 40% annual rate of return during the next 5 years for ARK strategies. Now, when you go to the bottom of this, right, this is pretty wild, man. Okay, so she has 9 funds. 6 are actively managed, 3 to track indices, and there's only 1 fund this year, which is the 3D printing ETF that's currently in the posting positive results. So that's pretty intense, folks, okay? Because of the fact that, of course, the market's up, and so folks that are definitely investing in that are going to be saying, okay, what is the problem here, man? If the market's up and we don't have, and we're down. And it has it. Let's put it this way: on her main fund, that's the only one I was really looking at, the AARK. She still has net positive cash coming in it, and that's crucial, so she can buy more of the same stocks. Dow Industrials right now trading up 556. You get the Nasdaq up 335. S&P's up 76. Stay right there, folks. We'll come right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading up 553. We got the Nasdaq up 335. S&Ps are up 77. Let's get over our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil has an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, the opening call. Now, it's very easy to get the opening call. Just come over to our website at TFNN. You're going to see the opening call right in the newsletters on the left-hand side. You hit subscribe, you hit view, you hit subscribe. You can get the opening call for 1 month for $149. You get it for 6 months for $695, which is a savings of $199 or 22%. And you can get it for a year for $1195, which is a savings of $593 or 33%. Now, they all come, folks. Check it out. If it doesn't work for you in 30 days for some reason, you get your money back. So you get everything to win, 0 to lose. We also have our Tiger Dollar sale going on out there, so check it out. That Tiger Dollar sale is over tomorrow. Basil Chapman, first off, we want to thank you from TFNN, all the producers, all the folks here. Folks, Basil sends us these nuts every year, and they're phenomenal, and everyone goes crazy. And we want to thank you, man, because it's always a pleasure. People go wild. Great way to kick off the 2022, man. Thank you.
Well, it's my pleasure. You guys do a fantastic job. You make it really easy for us hosts. All we have to do is show up, do our homework, and present our show, and we love that.
Pretty cool. Great. Yum, yum. Ooh.
I know.
Okay, what are we looking at?
I'm going to give Pistachio here in Watertown a plug because...
Yeah, you know, Basil, I use it now to give it to people. It's phenomenal, man. I mean, it's
fresh and terrific, yeah.
Because they make them right there. I see the machines, the whole bit, right? Yeah, right. Pretty cool, man.
So anyway, so market-wise, we're talking about nuts. We're talking about monster moves intraday for the last couple of days. What's really important about this is there's a pattern that I talk about a lot, and that's just I like to look at the market as basically 3 patterns: straight up, straight down, that's 1, cup formation, that's 2, and the arch formation, that's 3. And then you can get a combination of 1 and 3 or 1 and 2. I'll keep this up here to show you. See this H pattern here? The reason why it's red is if you take out this left side low, you can go quite a lot lower. And on the right is the inverse Y, green, because if you take out the left side high, you can go quite a bit higher. And you can see, in fact, right here on the chart, this is the daily chart of the Dow, right at that peak D, you saw there was like an inverse Y, and look how high you went to that doji candle at the top, 36,565. 8th of November. That's actually the day that we shorted. We didn't keep that short long enough, but it was a nice timing tool that we used for the Chapman wave methodology. And we went right to the 200 period exponential moving average. And we've been trying to trade from that on the upside. So what we did today, after those 3 very sharp pullbacks, we went along the diamonds as a trade, because you can see this pattern. I'm going to keep this right here for the moment. This H pattern, you can see we've got to look at that long leg down, and now we've started the arch formation. And there are 2 patterns actually that I talk about. The other one is this, where prices go up and then it makes lower highs and much lower lows. And then it suddenly forms a base of support, and it reverses and it takes out that resistance line. So I call that I like to nickname my chart pattern. This is called the falling axe formation. It can also be inverted, but right now it's a falling axe with a lower, it looks like an axe with a handle on a slope. And what we've got here is exactly that. In this Chapman wave inside track repellent zone at the top part of the trend line, that's this trend line here, there it is. That's where we arched over and came back. So I said to subscribers this morning, we're going along before the open. This is a trade we are still long from. We're still holding our core position from last year, March the 23rd, the day of the low. That's where we started with options. And then a week later, we got the diamond call, the diamonds themselves. And what we've done now is we've just added a trading position. And I said, watch out for the 9 and 14 period moving. I'll just move this away for now. The 9 and 14 period moving averages, because that's where you'd expect this to stall. That was fantastic support on the way up. Every time it pulled back, that's where it bounced. When it's shot through, I think, was it 3 days ago, it went right through, and now you've come back again. So the next level of resistance will be this inside track repellent zone. If for whatever reason, I don't care what the reason is, if the down continues to rally and it takes out 36,189, that's the high that was made last week, that's going to be very important, because then maybe we have a chance to get to the all-time high of 36,565. I'm expecting that this is going to be a strong resistance area, although we are looking at a number of stocks that have just been hammered. People talk about this as, oh, it's not too bad, but there are individual stocks that were leading the market up that have taken 20, 30, 40, and even 50% hits. So individually, that's something to be taking note of. Now, what's really important about this is that within the weekly chart, you can see we're just in basically an up channel, and the monthly chart, we're still near the highs. So this is something that I'm going to monitor very closely for subscribers. We've kept some of our core positions. We've taken profits there, but we've also kept core for some of the stocks that we've had for quite some time. And they're doing very well. I didn't want to overdo anything today. I thought if there was a big rally today, these are the stocks that should participate, and they are. But at the same time, I'm trying to find low price. I'm talking about single-digit stocks that I've been monitoring for some time that are doing very well and that are holding well. So for subscribers, I'm trying to see that we've raised cash. I want to put cash to work now on the long side on very low-priced stocks that have the potential to avoid any big downturn, because they're in areas that are kind of away from the marketplace itself. So it's being very selective. And that's kind of the posture that we're in. We've raised cash. We've got very select positions on the upside. We have right at this moment, we have no shorts. I expect that in another few days, or maybe early next week, we will start putting shorts back on again. So it's a fascinating market, somewhat overbought. It needs a bit of a rest. I'm still saying it's more a rest. Unless the Dow at some point in January takes out 33,500, that'll be serious. But in the meantime, I think it's a very well-organized rotational correction that we're looking at, and that's kind of how I want to treat it. I don't want to get too carried away either way.
Yeah, it's intriguing. I mean, Tommy on his show this morning, had the chart up from basically 1997. And I have that up now, folks, okay? But, you can see the type of consolidation, from 2000, the market goes sideways for 13 years. and then just never looks back, man. I mean, this doesn't happen, folks, just so you understand something.
Yeah, what you're talking about, Tom, I've got from 2003. I can go back further, but it's from the low of October 2003 at 768 in the S&P. Look at these beautiful channels. A beautiful channel that went all the way to 2008. Then, of course, we got that huge 2007, 2008, big pullback. We were actually lucky. We bought the very low on the diamonds the day of the low of March the 6th of 2009. And look, another beautiful channel. And now is the first time that we've gone very vertically up. But even this is in an up channel. And the S&P is still in leg B, although the futures made an extension, but the actual cash is in leg B. We'll see if it makes a peak B.
And folks, it's very easy to get Basil's newsletter. Come over to our website at TFNN. You hit newsletters, the opening call right on the left-hand side. Basil, have a great one, safe one. We look forward to the show tomorrow.
Thank you, Tom.
Thank you. Stay right there, folks. We'll come right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 533. You get the NASDAQ up 321. S&Ps are up 75. And we're going to stay with this context of this chart I put up here because this is pretty cool, folks. Okay, let's get it up here first. So I'm taking the SPY, and I'm putting, the cash S&P, okay? And putting that baby, in fact, let me do this way. I'm going to go 30 years, just so you can see this whole thing shake out. Okay, so what you have here is this. You're going to have, I brought this back to 92, okay? So 92, the cash S&P is like at 393. Now watch what happens, right? So we go sideways. You know, you got an uptrend that's happening, no doubt, okay? And the first leg that actually goes up, you know, it starts before 92, but the bottom line is that 92 on, we're at 300, 390 in the S&P. The S&P gets all the way up to 1,500, okay? That's in the year 2000. Then, of course, you have the crash that's accelerating a monster way. And you got to look at this, because this is what's crucial, understanding what's going on in the marketplaces. Okay, so from 2000 going all the way over to 2012, you had a sideways market. That's the real bottom line. That's a long time, right? Then we have taken off exponentially since 2000. Yeah, it's a monster pullback, there's no doubt. Here, I'll give you the next one. The next one's right there in the consolidation. But when you actually look at this on a longer basis, it's still not as long as the crash of 2000. Okay, so then from 2018, getting over to 2020, you consolidate, go back and forth, and then go topside again. Okay, so my whole gig is supply and demand, right? And I want to walk you through this, because this is really cool. And if you get to understand this, which you will, as you're just living your life, supply and demand-wise, this could help you. Okay, so we're going to start 1980. And I remember this so well. I think the Dow is, the S&P is, we're at 800 in the Dow. Because I remember I swim a lot. I was getting out of the pool. It was 800. I said, this is interesting, man. You know, now picture that. I hadn't been in the market. I was in the bond market. I'm buying and selling and all that. But realistically, I was my own market. So this is 1980, all right? 1980, I'm 30 years old, right? The baby boomers I'm a baby boomer, of course. What ends up happening, there's about 5 years over me. Well, what you have two different things. I want to talk about stock market. I'm going to talk about the real estate market, okay? So watch what ends up happening. You're just coming into making dollars. It accelerates from your 30s. That's how it goes normally, okay? Bottom line, you have the baby boomers coming in. They're buying the market, number one. They're buying real estate, okay? So you have the pop up in real estate. You have the pop up in the market. Now, this is where it gets really intriguing. So what the market does, as soon as everyone owns everything they can own, and Wall Street keeps pushing out paper, well, all of a sudden, there's too much paper, not enough buyers, you pull back. Inside of the real estate market, what happens, and this is really cool because anecdotally, I know this is what happened because I've been in it for so long. So what happens there is that first you buy a house, right? Then if you're doing good, you buy a second house. Now, as you buy the second house, if you are using the house, that's cool, right? But if you're not using the house, which, you know, a lot of people weren't using their houses, and they were always thinking that, okay, I can sell it to someone else and, you know, I'm going to make money. Well, what happened is that the first little downdraft actually happened in 1989, and it was a big downdraft. It was a big downdraft in Boston, in Florida, in Orange County, in California, and Alaska, okay? So you had the downdraft, and what it was is that there are too many people that actually were in the business of just buying and selling houses, flipping houses, whatever, okay? And there's no one else to sell them to, because what happened after the baby boom, the demographic went down dramatically, okay? Until the kids that are about 40 years old right now. That generation is bigger than the baby boomers. So now picture what happens, right? And this is the market that we're in right now. The market we're in right now is that you got the older people, baby boomers, they're not dying off as quick as they had been in the past. They're still active. They're still buying the stock market. And then on top of that, you have the 40 to 30-year-olds buying the stock market. And what else are they doing? The real estate market. Exact same setup. So this is what this is what I'm doing. Let's put it this way. You can decide what you want to do. So the kicker here is this, is that we're at the beginning of the boomers, it's not the boomers, whoever was born basically from 80 to 2000, I guess 85. They are in the market in a big way. The differential is that the older people are still in the market, meaning stock market and the real estate market, and that's why you see both of them being so accelerated and so healthy, basically. So the kicker here is that to sniff out when the market itself, and my take is that we're going to pull back into consolidation, because if you look at this S&P chart, it's insane, okay? There's no, can consolidate for a while. And the real estate market, we'll see how many more years we have, and the exact same thing will end up happening, because there'll be no more buyers. Everyone that's in is in. You know, right now we're cash flowing really well, so it's not here. People asking me all the time, like, okay, you know, price is high. Yeah, prices are high. Rents are higher, though, okay? And always remember, you just take the rents, exit times 10, and that's a fast down way to say, okay, what is the house worth? And what happens in the real estate market is that that formula I just gave you, once that'll go out of existence because they won't cash flow, and it normally takes a good 2 years after people are buying properties that don't cash flow, that I got to buy it, I got to sell it to you, you got to sell it to someone else. That is the beginning of the end of another downdraft. That's just how it works. And that, you know, we'll see how this is going to shake out. And then the other thing, so I was on TD Ameritrade network this morning for a half hour. I do this thing once a week. And this is pretty cool, because what would end up happening, I have to pick out 3 stocks to trade every day and all this. So I picked out Toll Brothers, okay? And they have someone on the other side of you. And the person on the other side was saying, hey, man, interest rates are going up. How's it going to go down? If we learned anything, folks, if you remember when I had the mortgage guy on, and then the 10-year rate went down the lowest it ever was, and the 30-year didn't go? The bottom line is that there's so much supply, there's so much demand versus supply inside of the mortgage deal. It is not going to make a difference, okay, if the 10-year even goes up to 2%, because I suspect the 30-year is not following, and the mortgage rates are still going to be like 4.25, you know? So it's going to be wild watching this whole thing shake out. 877-927-6648. Give us a call, folks. Dow Industrials right now up 519. NASDAQ up 318. S&P's up 72. We'll come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now trading up a 507. We get the NASDAQ up a 311. S&Ps are up to 71. And a couple of the tigers, one of the tigers is saying in here that that ratio in Boston's not working, and it's not. And this is what did happen in '89, folks, okay? That the difference of the real estate crash in '89, it was just as bad as the crash in 2007. Things went down 50%. I saw, so picture this, that the Middle Eastern investors, they gave up their keys to high rises in Boston, and the Japanese investors did. They never thought it was going to come back. It was down, the real estate was down 50%, 5-0, okay? Now, it came back like 25 months, okay? But bottom line, that was a regional one versus a crash. What happened in 2007? In 2007, what happened is that the stock market went, the real estate market went, everything went, okay? So there is a difference. And in Boston, there's no doubt that's happening, is that I think St. Petersburg, we're probably getting heavier rents than Boston, and the properties are half the price in Boston, and that's when you got to be careful, man. If you're buying a place and they do not cash flow, and you're buying it to sell it to someone else, or wait for an expansion of price, it's trouble. That's the bottom line. And when there's a lot of them, it's trouble. So we'll see where it shakes out. What is happening, no doubt, in Florida is that you've always had a good market. Now, what has happened in St. Petersburg, where we are, it's a year-round market now. It's not even, and so when the snowbirds come, of course, is that they do accelerate everything up. There's the rent-wise, they're accelerating up. And rent-wise, I believe, probably, let's see, they're giving some numbers here, and the ones in Tampa and St. Pete, this area is really growing. I mean, I suspect between Jeff Finnick, between Brady, there's some people that worked quite a bit to put this whole area on the map, and it's happened. And I can tell you for small places, so watch this, for when I say small places, let's say 700 feet to about 900 feet units, you get $3 a foot all day long in rent. That's a monster rent, folks, for small places. And that's with the tenants paying everything except the tax, so we'll see where it ends up shaking out. But bottom line is that the demand is way over the supply. And I can tell you that it's going to be intriguing watching even some of these home builders. Let me say BZH, because this is what's happened. So listen to this. This is so, it's so cool. Yeah, let me see. I gotta look at my phone for a second, folks. I gotta look at this text, because I was dealing today with trusses. Trusses are the hardest thing right now to get when you're building. Okay, so, and I was talking to the coordinator for the west coast of Florida today, and I just want to see Pluti. Okay, so listen to this. This is builders. Yeah, watch this. This is pretty cool. This is a This is Builders First. This is a public company. There it is, Builders First Source. So watch this. Watch this number, man. This number's sick. So the low for the year is $37. The high is $80, right? Watch this revenue. They must have bought someone. They get 26,000 employees. But look at this. So 5 years ago, they said did $7 billion. This year, they're going to do $19.6 billion, okay? So these folks, what happens, folks, is this. Wood's not hard to get. Where your windows are hard to get, trusses are the worst, okay? Meaning you can put truss orders in 6 months, and they want the deposit before they put them in. That being said, this is what ended up happening. So now let's do this. Pluty. Okay, so, of course, we have the villages here, and we have a lot of building here. And when I was talking to this coordinator that runs the West Coast, he was telling me that it's so heavy right now that the villages is a large, these folks put together like something that's pretty amazing. It's like a whole city, and they just keep building. Well, the bottom line is that they told the villages as well as Pluty that they can't handle the trust issues anymore. They don't want their business. And I would say, they didn't exactly tell me why they didn't want their business, but I know how that deal goes. What happens, folks, is this, is that when you're not busy, right, you will take lower prices. So their contract was probably up. They felt that because of the number of homes that they're doing and the price spread that they're getting. Let's say trusses cost me like on a 1,900 square foot house, it's like $13,500 for the trusses. Okay, this is a roof trusses, and I bet they sell those to Pluty for probably $9,000, $8,000. I don't know what the price is, folks, but I certainly know that where I'm doing 5, they're doing 300 at a time. Okay, so you can imagine what it is. And what ends up happening there, though, and this is what's so intriguing when this happened, I'm saying to myself, I got to really start looking at some of these other builders, because you can say in 1 second that, okay, it would make sense that the whole building industry goes up, but on the other side of that, if in fact you cannot get the product, okay, it's not going to happen. Oh, and I'll give you an update. So listen to this. I think I'll give you an update on these, oh my God, on the containers. Remember the last time I was telling you, so picture, before the pandemic, $1,750 to bring a container in from Shanghai to Tampa. 6 months ago, $14,500, same container. I'm saying to myself, nope, I'm going to leave it. Listen to this. The day before yesterday? No, Friday, yeah. $18,000 to $20,000 per container. So it hasn't got better at all. $1,750 to $14,500. Now we're at $20,000. They got. Hey, listen. I didn't think they could stay at $14,000, so they're at $20,000. So whatever people are bringing in those containers, you have to have a huge price spread that you're making huge amounts of money. We can see. I mean, just because it's. We'll see how you talk about supply chain issues. That's an issue that's extraordinary, no doubt. Let's go take a look at Bitcoin, see if Bitcoin's going to hang tough here. I might take Bitcoin's going to 29,000, but we got a nice bounce out here today. Let's see what we got. Well, that's nothing. Yeah, you're up $1,500, but that's not a big deal. You're down from what, 60? You're down from 68.5. Yeah, this is building cars. This is still building cars for lower price. And this, the 39,000 is wide open. 39,000 is the swing low that is basically, September of 2020, right? Yeah. No, of this year. My God. Yeah, that'd be right. We're in December. So, we'll see how that baby's going. Dow Industrials right now trading at up 484. You get the Nasdaq up 311. S&Ps are up 69. Stay right there, folks. Come right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So Dow's up 530. You get the Nasdaq up 343. S&Ps are up 76. Let's go take a look at MP. So MP is MP Materials. They produce and market rare earth specialty minerals. The low is $23. The high is $51. Revenue-wise out here, they do $83 million a quarter. Next year, this year they did $315 million. They're looking next year $437. So let's see what we have here. Put this on a weekly. Okay. So you're going to go after the highs. Yeah, this is a good setup. I mean, you have a long consolidation. A consolidation in this equity started a year ago, December of 2020. First high wasn't bad with volume. You're making it through then you came off the high with volume on the way down. That's what's stalling this baby up here. But this thing looks to me like, it's going to go after the highs again, which that highs is, that's 51.77. That's how that baby is set up right now. If we take a look at the volumes inside the marketplace, you're going to see this is a bounce on light volume. Right now, you're at 565 million inside the NYSE. That'll do about 850. We did 1.1 yesterday on the way down. NASDAQ Composite, that's pretty good. 3.9, so we'll probably do about 4.5, 4.6 inside of the composite, which is pretty good, okay? So see, the composite can bounce all the way up to like 792. And that's another 600 points. We're at 15,962. So the bottom line is that, if you're going to sell this market, have some patience, because my take is that we're going to be in a large consolidation. But my take first is that, guess what? This one's higher price. Going to be pretty cool watching the shake out. And if you've never traded a consolidation, folks, right? In fact, we have a consolidation, you're going to love it. Monster consolidations like this are just great, okay? Because you don't have to get the top. You don't have to get the bottom. You get that middle, man, you are doing just fine. Oh, excuse me, folks. Always remember, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. We'll get him, folks.